Good morning, traders. It's 8:01 a.m. Chicago time on Friday. Happy Friday, everybody. Happy Options Expiration Friday, that is. It is July 21st, 2023. Again, 8:01 a.m. This is episode number 2507. Just remember, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Somebody wrote to me and said, why do you have to say that every day? Sorry, I'm losing my voice. I'm actually under the weather. I'm going to try to keep this short. They asked me why I have to say that every day. The reason I have to say that every day is because we're talking about futures, derivatives, which are derivatives of the underlying, whatever the underlying is, whether physical or financial. And as such, they are leveraged products. And as such, they are risky for those who can't control their risk. And therefore, as such, they are not suitable for all investors. And in the interest of keeping the public safe, the law requires that I state that disclaimer every time I talk about futures to the public, right? So that's why that is. Just a little insight into the world of regulation and compliance, and we are very, very compliant. So here's the Convergent Trading pre-market summary sheet this morning. As you can see, we have a long tilt here. The market is in a risk on. It has shifted a little bit more since the pre-market summary sheet was prepared about 15-20 minutes ago. It has shifted a little bit to the long side. The S&P has climbed an additional 15 points or so, and the NASDAQ has pushed quite a bit. It has pushed about 25 points since we did the sheet. So this is so it's shifting a little bit. It's no longer mixed, really. It is mild risk on as the posture. No, you have to state it. You can't just write it down. It's actually on your screen at the bottom. It's on your screen at the open. You have to actually state it because some people may be listening and not watching. So this morning, as far as earnings, American Express, my very first credit card out of college, reported they beat by about 2.85%. They came in at $2.89 versus $2.81. They missed on the revenue figure. We also got SLB and a bunch of others. I'm not going to cover these. After the close, there is nothing. It is Friday. And so let's move on to what news there is. Options expiration today. I was just going over the gamma exposure numbers with the folks, the members of Convergent Trading. You can find those comments in the Maven channel to talk about, where gamma exposure is neutral today and so on and so forth. NASDAQ 100 to undergo special rebalance effective prior to market open on Monday. This is always interesting whenever we have an index rebalancing. Generally we have a repricing of the product, and so we may see a gap there. UK retail sales higher than expected, Canadian retail sales lower than expected. By the way, interesting headline that came across that I noticed this morning is Belgium has hit its target inflation rate of 2% somehow, ahead of every other Western economy or major economy. They're not that huge, but they are at their 2% target somehow. So that's very encouraging for the market. Canadian retail sales lower than expected. Bank of Japan reportedly won't tweak its yield at next week's meeting. India's rice exports ban further raises global food price inflation fears. Today, we really don't have much to look at in terms of the calendar. This morning, we got Canadian housing numbers, and that's really it. I mean, the retail sales out of Great Britain came in at 0.7%, expected at 0.2%, which is stronger than expected, and that's it. So the auction the auction in the ES now, focusing on the S&P minis. The overnight status and the auction condition is trending. It has been since the open, and it continues to squeeze higher. We've moved quite a ways up. We've taken back pretty much the open of yesterday and have somewhat neutralized yesterday's sell-off. The range is pretty good at 26.25 points. We've done 148,000 contracts, which is relatively light, and the inventory is 90% short. The high currently at 45.88, which was just put in, and it continues to get squeezed. And the point of control is at 45.75. Remember, the point of control was 45.90 before, right? So that's what we've got this morning. Let's look at the charts. I would, I'll take the time to show you what I said yesterday versus what happened and all that stuff. But you all probably know, those of you who were here yesterday, we were trading in here in the S&P, and the conversation circled around the idea that one-time framing was broken yesterday at the open. It would be broken. And it's very, very likely, although the S&P is stronger than the NASDAQ relatively, the most likely trade is a push higher that would lead us to some selling. And I was looking for this thing to start moving down. And I talked about 81. If we take out the 81, we're likely to go for 65 and 60, right? That was the conversation that came from Wednesday morning's Trader Bite, that came from yesterday. And the idea is if we break below, we would likely run into resistance above, and we're likely to push into the 60. Yesterday we went to 57, so we pushed by about 3 points. Okay, so this is what happened yesterday. It's exactly what was expected. Beautiful setups, and I'm saying this having run a prop shop with a bunch of traders in it. Whenever we say, oh, it was such a fantastic day yesterday, you're liable to piss somebody off, because while it's fantastic for you, it's probably awful for somebody else who was going against the market. So I say that out of respect for everybody here, that we did have some really nice setups in my approach and in my time frame. In yours, it may not have been a great day, but in the context of how I look at the market, it was pretty decent. Yesterday was all about stalking failure to push higher, and we saw it yesterday. I talked about it narrated it in the Convergent chat room. We saw bubbles come in and the market stall out as we pushed in the NASDAQ, as we pushed higher. And then we finally came back, consolidated, and then we finally had a breakout trade that just blew to the downside and got the key target, which was, if you recall, it's 15,780. Okay, 15,780 was the key first target that brought us back to this point of control. You see this? This is the volume point of control. That's the 780. That's what we were looking for from the 880 region. So we're looking for a short from up here somewhere down into the 780 area, and then it just kept running and running and running. One time framing down was beautiful for the entire session until later on we could see bubbles coming in right down here. You can see the point of control is at the low end of the range. We closed and settled right on top of the point of control. Very, very, very structural trading. Same here, Elvis. Same here. Very clear collisions that held, and it set up what is nowadays a rare but beautiful kind of trade. Here's what I'm talking about. I'm going to cycle back to yesterday. See those red dots right there? The yellow span here. In fact, let me let me reduce the contrast on this on this color. Let's bring that down to say 7%. There we go. Beautiful. So the yellow region is the IB. It's just me marking where the IB is. And you could see that we opened right in here, very weak to the downside. So it looked like responsive buying, but we don't fall for that trick. Responsive buying, we could see the collisions coming in. This is unfortunately not MBO data. This is not as clear as if the platform was running and remained running, so that we're collecting MBO data. We can't store MBO data, but there were blue dots, big blue dots, meaning the market lifting pretty strong against steadfast sellers on the limit on the limit offered. And there are blue dots showing up. Boom, boom, boom. It's hitting a ceiling, a glass ceiling. And then as soon as it rolls over, we get the red dots pulling back, which it's pulling in here, showing that those who didn't get filled at the limit started hitting the market. So we could see that the NASDAQ, although the S&P pushed into the prior range, so the S&P was relatively in the 16,000 area, the NASDAQ was just unable. And then when it put in this low here, I think it was 50, oops, what's going on here? It was 50, yeah, the 57 area. Once it put in this weak low, see this double bottom right here, and then was unable to squeeze through and hold, this created a setup to break out short, and off to the races we go. And you could see the IB was formed on the way down. So this is not a valid IB low. We don't trade against it. I warned members not to trade against the IB for the continuation, and we ended up just kind of pulling back a little bit and finishing pretty weak. So pretty decent structure. Look at that thing run. Pretty decent structure. Secondary entry, zipper right here. So we have another impulse there. So this is another impulse right here. Zipper, breaks the zipper, pulls back right there, very, very quick, and then a continuation yet again. But since then, this morning, look at it. It's been in a pretty decent up channel right here and accelerating to the upside. We're almost at yesterday's mid. We still have a lot of area to cover, so you could see that the NASDAQ is still a lot weaker. The S&P is somewhere in here on a relative basis. The S&P is well above yesterday's open currently. So the NASDAQ still dragging with a very weak delta, positive delta this morning. What does this mean? I don't really know. It's not really an indication of anything other than the market's really finding prices cheap down here and has moved away from yesterday's settlement and point of control and has squeezed up. So it's pretty straightforward stuff here. Here's yesterday's profile, and so you can see those collisions right there. Again, if you have Edge Pro X, you should have access to this template here that you can load. But you have, these collisions on the way up. That was a very clear indication, an order flow indication. We already had the structure in that we're going to look for opportunities to sell on responsive buying. That was the plan yesterday. And then you had a very clear order flow based indication up here that it's struggling. And then it finally pushes up. So what we did yesterday is we left these single prints behind. Let's realign this. You can see there's single prints from there, 831 all the way down to 787. As long as this 831, 830 area is open, this thing is relatively weak. We left a second set of singles right here at 679 all the way down to 636. We're above that, but we are well below where we were, and the next area I'm looking for a retest on in the NASDAQ is the 733 to 740 area. I'm looking for what happens up here. I'm expecting some resistance in this area, and that's further complicated by the fact that we've got expiration today. So that's what I saw yesterday, just to give you some detail on the approach. In the S&P, the S&P was a bit of a different animal. It ran up from the trader bite onwards, like I've noticed ever since, I don't know, a couple weeks ago. While the trader bite's running, this thing keeps, is often rallying, and then we just run right through, and we put in a pretty bullish or drive-ish behavior type in the S&P. The S&P did the same thing and broke the equivalent of what we saw in the NASDAQ without the double bottom here. But what it did is it broke the mid, and then came right back right here on this bar, came right back for the continuation trade lower. The same situation in the S&P. The IB is poorly formed, so we don't lean against that. And when it bounced back up, it bounced all the way to the prior day's low instead of holding these the mid and VWAP area. So little tougher, in my opinion, to see, and even when it broke lower, it was tougher to catch a continuation trade. Since then, the S&P has actually had a more accelerated trend channel. So you could see the trend channel right there from the overnight session, and it just accelerated up and is continuing to do so. So it's the S&P is a lot more bullish. It has left yesterday's mid behind. It has left yesterday's open behind, and is pushing into that low of day of the high of the market. So this is what we have. We have a pretty decent positive delta in the S&P. Let's look at the relative delta here. Look at that. Pretty decent positive delta. So the S&P, the crowd in the S&P is a lot more bullish. Now, with options expiration, okay, I'm going to state past performance is not necessarily indicative of future results. Just because it happened in the past doesn't mean it'll happen again exactly the same in the future. But on a back test, if you look at options expiration Friday, there is a positive tilt. I believe in a 68% range historically. There's a positive tilt, meaning the market generally ends up higher than where it opened on this day. We saw that last month, and we may see that again today. There's just generally an upward tilt or an upward bias to options expiration. I'm not trying to color your bias here. I'm not trying to tell you should be long today or trade from the long side. Trade your plan, trade what you see, trade the facts. Don't try to anticipate. The biggest issue that I can identify that traders have with the market, other than their own psychology, is the fact that traders believe that they're trading in anticipation. You are not trading in anticipation. You are trading facts. You're trading statistical probabilities based on facts. Okay. Convergent members, I cover this quite a bit in yesterday's group mentoring session, but this is an important distinction between those who are comfortably trading, and accepting what's going on, and those who are constantly trying to pick tops and bottoms and trying to anticipate what the market will do. So what's the plan for today? Let's take a look at the bigger picture. What have we really done? So let's extend. So this is a profile from last week's action all the way through. We still have this gap zone beneath us. We still have this really, really important area in the 45.25 to 45.20 zone. We didn't come close to it yesterday. We pushed against this expected support. Remember, it's 65.60. That's where the green zone is. And then today we actually pushed through This 83 to 84, 81 to 83 area that we've already talked about, we're on top of that. So what does that mean in the sense that what it's likely to do today? What that likely means is that any attempt to pull back today into this same zone, 83. Oops, it's a weird way to write 83 to start with the 3, right? Any attempt here, I'm going to be watching for collisions against the bid, and I'm going to watch for it to struggle for pushback out of this zone right here. Excuse me, 1 second. I need to clear my throat. Out of this zone right here and to squeeze higher. So back to 4,600 and so on and so forth. The naked point of control, there's a naked point of control way up here at 4,604. And that would be the primary scenario. Why? Because the market's already told us that it has pulled back and it is rejecting these lower prices. The market has already done the job of finding those buyers. So who am I to come along and say, well, we sold off yesterday, so we've got to sell off today? No. The point of control from yesterday was left behind at the top. Contrast that to the NASDAQ, which was down here, and it's above that. It's above yesterday's mid. It's taken back this impulsive day down. It's taken back pretty much everything about yesterday, and it is very likely to challenge the high of yesterday this morning. So that high was 45.94 ish. So it's very likely to challenge that. So the primary scenario is up. The secondary scenario is an open auction that pushes up against that 94, 95 area, pokes it, pulls back, and then if it pulls back into the range, it is likely to go sideways and drift into options expiration. So I'm not expecting this thing to sell back off aggressively today. That would be the third scenario: push up, open test drive down, and then if it gives up the 81, then we're looking for a pullback to get short, and then in that case we're back at the point of control and we're drifting towards that 45.65 again, right down here. These are the three key scenarios for today. Looking at the NASDAQ, the NQ. By the way, the GEX neutral level, is at what is it? 67, 45, 67, 50, something like that. That's what we're looking for on GEX. Given that it's expiration, I'm paying attention to that. On the NQ, let's look at the NQ real quick and wrap this up. On the NQ is trading right up here. So the NQ still has some room to the upside for its, it basically pushed into yesterday's VWAP in mid. The NQ's high is at 17. These are at 18. The NQ is opening right up here. So the NQ is the same thing. Any test down, I'm watching to see how it behaves down here, and I'm looking for it to push back to that 780 for balance. Okay, so that 780 is built on the combination of all of these profiles. We're looking for it to come back into the 780 from, probably 680-ish, something like that, 690. If not, then it's likely to open, test higher, come back, and give up this 690 area and then start moving towards 15,592. We'll see how that plays out. That's scenario 2. Scenario 1 is 780. Anyway, I'll let you go. 3 minutes to the open. Good luck. And don't forget to hit the like button and to subscribe to the channel. It's free. And of course, tell your friends about what we're doing here. Good luck. Take care.